What is going on today, YouTube? Today I want to talk about how exactly day traders make money. This seems to be a common question now, and I want to explain. If you're wondering how day traders make money, it is all based on the volatility. If there is no volatility in the market, they cannot make money. What is volatility? Volatility is your price fluctuation either intraday or day to day. Now, depending if you're a day trader or a swing trader, if you're a day trader, you want to see a lot of volatility intraday, which just means during the trading day. And if you are a swing trader, you want to see a lot of volatility day to day. Now realize, a lot of volatility doesn't always mean you will make money. You can lose a lot of money if you are on the wrong end of the trade. So for instance, for this video, because DGAS and UGAS are both natural gas ETFs and they have been extremely volatile. So we'll use them as this example for this video. Okay, so from day to day, we're going to look. I know this does not look like much, but just watch when I point this out. Realize between this line and this line is 50 to 100, so you are doubling your money. You're going up 100% from here to here. Usually, day to day, stuff is not this volatile, but these things have been crazy. In DGAS, the inverse is UGAS. So if DGAS is going down, UGAS is going up. But look how crazy this is, day to day. From one day to the next, because we are on day candles. That's right around a 10% loss from close to open. And then we'll go over here. I mean, it's hard to see, but even from here, this closed here, it opened up here. We're still around it. We're around 20% that day, just from one day, 20%. That's huge. That is enormous. But guess what? If you're on the wrong end of this trade, you lost 20%. From here to here, open to close. That's around 10%. This thing has been crazy, crazy volatile. Now we're going to look at a day chart. We're going to look at 3 different days at 1 minute spans. This will be a lot easier to explain how traders make money. And we'll even go over to you guys because of this little drop right here. It'll be a lot easier to explain on you guys. Now you can short that. That's how you make money the other way. If you short it up here, which is very dangerous because you don't know how high this ETF will go, but when it falls, that is when you make money when you short stocks. But that's a whole different video, whole different case. So anyways, we're going to go over to you guys. You guys, same chart. You can see now this is an up. So if you're just a trader that likes to buy things, this is where you're going to make your money. That's going to be where you make the majority of your money today, is this quick rise. Now think about this. The most you can make, absolute most you could have made today on you guys if you were trading is 13%. Yes, that's phenomenal. But how in the world could you have picked that this dip right here was the end it was going to dip for the day and it was just going to go up like crazy? It is almost impossible to call that out. No trader out there, consistent trader that make money on a consistent basis, is just going to try to buy these bottoms. I mean, if this stock is falling and falling and falling, you could have thought this was the bottom right here, bought in here, and you're waiting, you see it go up a little bit, you're all excited, you're like, okay, this is it, it's going to keep on going. But no, it doesn't. It falls, and you probably would have got out because you're down 2.5%, give or take right now. So you probably would have lost 2.5%, and you would have been very lucky to get in down here, to go the whole way up to here to make your 13%. But in essence, that is how they make money. They need extremely volatile ETFs or stocks. They jump in for a little time period, usually to make 1-2% at a time. They usually do not hold on for that whole duration, and I guarantee a lot of smart traders, while this thing's on a downtrend, they're probably not getting in. Downtrend, I mean it keeps on making lower lows. Lower lows. Lower lows. Lower lows. They're going to have to wait till it makes higher highs. And here, it would have been hard to catch too, because yes, it went up from here to here, but at the same time, a consistent trader out there that sticks to a plan, he's most likely not going to buy this initial rise right here because it matches here. It is technically not going up any higher. They'd probably wait till it came back here and then buy in because they think it's going to keep on going higher. And if you're someone that pays attention to these lines, like to these VWAPs or anything, a lot of traders won't buy it if it's trading below this purple line because technically it is on a downtrend when it is trending between this gold and this purple. It is only on an uptrend when it is trading between this purple and we're going to call this a pink line. So these day traders, they thrive. They thrive. They do their best on this volatility. We're going to try to go back a little bit. So we're going to look at this previous day. We're not going to look at, this was December 20th when I'm recording this video, and this is going to be December 19th. So what I mean by higher highs, see here, this goes up, it comes down, and this low was higher than this. It goes up, it comes down, and yes, it did trend for a while, but that is why it's so hard to trade the market, and when they're getting in for these trades, they're just trying to make a couple percent. They're not going to ride this out to make 50, 60, 70%. Yeah, you might get lucky sometimes and it goes up that fast, but it does not happen that often. The main point of this video, if these are not moving this much intraday, day traders can't make money. You can only make money when the price is fluctuating. We'll look at a different one, like DRV. It's another ETF. It doesn't move as fast. So when this doesn't move as fast throughout the basis of the day, yes, it went up 3%, but you're not getting these crazy swings like you were seeing over at DGAS and UGAS. This is the best time for traders to make or lose money. See, like this, it's going. It's trading in between. For DGAS, on Thursday, yes, I did say earlier the best chance to make your money was on this big dip. But a lot of traders that were trading this DGAS throughout the day, they're loving this price action between this purple line and pink line. If they follow these lines at all, technically this ETF is on an uptrend the entire day. See, it has its pre-market lows. It gets a higher low here. 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 That is the easiest thing for a trader to see, identify, and go. And trust me, they do not know all the time. Look how fast this price is moving. So in a matter of 10 minutes, you could have made 10%. But look, it went up 10% in 10 minutes. That's huge. But you had to catch the absolute bottom, which if people saw it keep on riding this middle purple line, that's a good indicator for traders out there. Okay, it's bottoming out. I'm going to trade it, and it's going to go up, which it did. But you cannot always count on that. That's why they always say calculate your risk, calculate your reward. Figure out what a good trade is. There's nothing magical about this process. They all calculate risk reward. They look for volatility, and they try to get it when it's cheap to buy it to wait for it to go up. For instance, say, okay, you saw this consolidation here. You go here, you think it's the same thing's going to happen, you buy, look how fast this goes down. Then you're losing 3% in 6-minute time frame. Or you saw this flattening out here, you're thinking, okay, it's going to do the same thing as it did earlier in the day. Yeah, it's not as close to this purple line, but it's consolidating, it's going to push back up. Guess what? It does the opposite. It goes down another 3-4% in a 13-minute time frame. Volatility is how you make and lose money in the market. So that's it for the video, guys. If you liked it, if it taught you something, drop a like on the video. Helps me out. Tells me I'm making good content for you. If you have any questions, comment below. And if you like content like this, subscribe to my channel. Generally, I just talk about investing in general. I talk about trading here and there. And I try to point out the fact that all these traders out there that are making money, yes, they make money, but they are only going 2, 3, 4, 5% at a time. A 10% increase is not something they'll usually sit on. They're going to get out at a couple percentage because they know how risky it is to be in the market. That's why swing trading is even more difficult, because if you go to hold it overnight, you're really counting on that stock to go up in the morning and you have no control. You can't take it out in the middle of the night. You gotta live with it. So that's it for the video. Any questions, like I said, comment down below and subscribe to my channel. Now, see you in the next video.